Ladies and gentlemen, welcome to the Fintech Frenzy. Sorry, that was starting to sound too much like a sports commentator there. Jeez. All right. Today, we got a Fed decision, 25 basis point cut, but the stock market is absolutely correcting on what was some anticipated news. So let's talk about this as it goes a little bit deeper than this and why potentially the market is correcting for these reasons. Anyway, in this, we're also going to be talking about some SoFi stuff, some different buys that I've actually been buying. I've been buying a couple new companies recently and ended up buying the dip after the Fed's fund meeting, or FOMC, I should say. And then we'll just go through a couple other topics. I feel more at home with these type of days on rather than the days when the market is ripping, because one of the things that I'd like to think that I'm good at is potentially just calming some nerves. And that is definitely what is needed during these times, not necessarily just telling everyone to pump. Okay? All right. Let's start with the Fed funds economic projections here, and then we can go from there. Really quickly, as you can see, unemployment rate between the September meet to then December, the actual rate has gone down for expectations for 2025. Yet, the real reason why markets are actually collapsing right now is this. The 2025 federal funds rates are now expected to be potentially 50 basis points higher. So now they're only anticipating about 50 basis points worth of cuts rather than the potential 100 basis points cuts that should have been priced in. So although we got 25 basis points today, we're only anticipating 50 for next year rather than the 100 or 1 full percent. All right. So this also drags out the 2026 numbers as well, which, they're sort of saying that inflation might be just stickier and longer time for them to get to their 2% rate. And so it might take a little bit longer. We get this. I'm going to tell you guys what I'm doing, and then we can go through some of your worries and everything like this on stocks dumping. First of all, let's talk about that as well. Let's look at the stock market really quick. Upstart getting hit, probably one of the hardest out of all these fintech names that we take eyes on. Well, I'll just zoom this in real quick. Down 11.65%. Let me bring this over here really quick. Okay. Nubank down 11.1%. And this is not even an American company. We're now down to $10.40. Partly this was Brazilian news and then got dragged down at the Fed news as well. Robinhood stock down nearly 11%, Affirm down nearly 11%, Coinbase down 10%, Opendoor down 9.5%. Unity, man, I can't catch a break. Okay, I don't want to own this company. I own it because of a freaking Christmas gift, and I'm not allowed to sell it to the new year. I was hoping that this thing was just going to stay mediocre, like stay in the $28 ranges till the end of the year. At least I can then walk out with some semblance of not even gains. I'm still down like 40% because someone that is going to remain nameless, Tevis, told me to buy on January 1st here. I haven't had a day of gains. He was like, you should buy on January 1st. It's just, all right. I love Tevis. Speaking of Tevis, he's probably purchased like 1 million shares of Hims and Lemonade today. All of his cash secured puts have probably just closed. And he's probably holding on to like 1 million shares, down 8.8%. But if you believe in the company long term, that is a potentially a small price to pay. All right. SoFi down 8.5%, down to 1524, 1553 in the after hours. Tesla down 8%. This is probably one of the largest share gains out of any of these companies. It has by far the largest market cap, but it's just a total red bath just across the entire market. Look at this. Holy. Okay. So this is not just a SoFi problem. If you go ahead and take a look at these markets, S&P, Dow Jones, NASDAQ 100, all just had a terrible time after the FOMC meeting. Okay? Now, let's talk about some things of how to stay calm and probably best actions to do during these times. I bought after the FOMC meeting, I bought 2 different companies. We can talk about that. And yeah, to me, the sky is not falling. Okay. I put in on the thumbnail that the sky is falling, little clickbait. That's not what's happening. Okay. If you buy great companies and hold them for the long term, it's going to sound repetitive, but investing is a patience game, and I'm here to keep you guys a little bit sane during these times. Just remain calm. Okay? Remain calm. If you have cash on the sidelines, look to potential opportunities to buy dips whenever these are given to you. If you think that the valuations of these companies, potentially 2026 valuations, are not changing, well, then you're just getting these companies at cheaper rates. Now, potentially there are companies like SoFi, for example, that are going to get hit even harder, and other companies like Robinhood and Coinbase that are more, more exposure to crypto and all these other things, that you have to look at other means to why this might affect their actual earnings. But the companies that I bought are a little bit insulated, and I'll talk to you why. And they're not defensive plays. I'm still looking for high growth. I'm looking for tech. I'm looking for innovation. I'm looking for AI. Okay. But the small changes in interest rates or even interest rate outcomes are not going to change. So this is the next thing that I wanted to talk about. And it's essentially talking about what is going to happen here. All right. The dot plot can come out, long-term rates, they can be set, everything along these lines. They are terribly inaccurate. There is so many ways that forward-facing market expectations can differ greatly from actual, Fed funds rates that, are actual. I already said that. But as you can see here, in the pink lines that often diverge from reality, that people can get wrong what they think the Fed will do. Okay? So whenever I look at this unbelievable string here into the future, is this actually what we're going to see? The truth is, we don't know. If you can predict, federal interest rates 3 times in a row, I think it's 3 times in a row, you'd be a billionaire. Okay? So it's impossible to do. Everyone's tried to do it. They always get it wrong. Buy great defensible companies and hold them for the long term. I personally, today especially, and even before this, but I'm doubling down. Tanner bought Opendoor. Yeah, no, that's me. Buying defensible businesses that are not as interest rate sensitive. I bought Opendoor. Did I see any? Let me see if I saw any guesses in here. The Robinhood Weekly people will get it for sure. And Tanner bought more Shift 4? No, but potentially not a bad one. Can SoFi tank more, just while people are potentially putting in their guesses? Because I haven't seen the right answer yet. Can SoFi tank more? Yes. Everything can tank more. The whole market can continue to drop. So, that's not something that you can predict either, right? What you can potentially predict, or at least I feel like I can predict, is whether or not that the next quarter that SoFi puts out, that they have more members, that they have more products out, and that there's probably more or better data that they're collecting, better ways to efficiently market to new customers, and that they're becoming a better business, and that their competitors are potentially not getting as good as them as fast as SoFi is getting. And so that market share gain will continue to happen going forward. That is what I'm focusing on. See, whenever I actually made that course, the growth investing course, I put out a 25 checkmark list of these are all the things I look for in growth stocks. So I put out this, 4-hour presentation. It's just a data overload of this is what I'm looking for in these companies and everything like this. But then at the end, I just do one PDF checklist of put your own stocks through this and see if they come out on the other end. And that's exactly what you need to do if you feel like times are uncertain, or and assuming, by the way, assuming that your time horizon is longer than, let's say, 10 years, for example. Once you start getting into that, you probably need to get into some different strategies, potentially looking into safer stuff like dividends, or even into fixed income, or even into treasuries, right? But depending on how short term your needs are. But if you're looking for maximum potential over a long period of time, which is the only reason why growth investing is really important, it's for long term investing. Okay. You need to focus on the actual fundamental aspects of the company, the qualitative aspects of the company, I should rather say, right? How much better than them, or how much better is this company getting than their competitors? And, where's the like customer, what do you call it? That customer behavior, is that going in the direction of your business? There's other things too that are on those checklists as well, like whether government is on your side or not. You definitely don't want to be on the wrong side of government. That can definitely hurt or kill or benefit your business. Look at Enphase to be a great example of that during the Biden administration. Amazing play. As we get into the Trump administration, massive collapse. They'll probably still be fine during this time because solar will continue to grow, but incentives is a great way to grow a business very fast. Let's see here. Did you guys guess it? Yep, side by side. Google, Amazon. Exactly. Back to back. Google and Amazon. That's exactly what I bought. All right. Why? Because nothing about the Fed's funds rate is going to set whether AI is continuing to move forward. Okay. These companies are going to benefit massively from this. And from what I've seen, I was really uncertain about Google. I've got a video coming out on Google next. But I was definitely wrong on a lot of things about Google and how fast they were going to lose their market share. I'm not necessarily saying that they're not, but it's definitely nowhere near the rate that people are saying it's going to be. They're still growing in search advertising. So, but yeah, and even you look at Google and Amazon versus the rest of the markets, like every growth stock that I'm investing in right now, and they're not moving nearly as down because people look at these as flights of safety now. And yet the benefits for them in AI, it's like these are both cloud compute plays. They've got massive moonshot projects. AI will touch every single aspect of their business. Like, just so, like, I don't know. These companies that all benefit from robotics, AI, they're still pretty undervalued, especially Google. Microsoft's a better AI play than Google? We'll see. We'll see. You're also getting, like, from a forward PE perspective, getting like a 50% discount on Google to Microsoft. So am I worried about new? No. The business is going to be fine. The stock will probably hit some stupid prices in the short term. So I could see it definitely going into. I'll answer you in a sec, B-dubs. I think that the stock could potentially get into the single digits again, and then maybe I'll start to add. But this is why I was not adding. Like, in the short term, the macro can completely control this company stock price. There's a reason for that. I think that the real reason why Google is taking a big beat down is that there was a real opportunity for search to get disrupted by, ChatGPT and the like. But Google is right there. Gemini 2.0 is nothing to scoff at. It's super great, and they could potentially be doing and already have the market dominance and bringing what ChatGPT has to Google users, and the cost per query is going to be extremely low. That was something that I got absolutely wrong. I thought that it would be so much higher of a cost for them to, run those models, but it's not. It's not. It's only getting cheaper. And also, we're still only a couple of years into this movement. Like, I want to see what this looks like in 2026, 2027. I was just going to start continuing to name further out dates, but like, um, I think they'll do very well, and I think Amazon is a very sneaky one as well. AMD, I don't need to play AMD. I've got Nvidia. I believe in Nvidia. Um, yeah, Nvidia is my largest position. I don't care to add to that using getting into AMD shares. I will 100% start a position in new in single digits. Well, we're 40 cents away, not from after hours, but from the close. Yeah, I mean, like, we're all on Google right now. YouTube is Google. You guys want to email me? You got to use, or well, I mean, you don't have to use, but even my course, like I say it right on the course, like, hey, if you're going to sign up with a Gmail account because it's much easier for me to get you a lot of the resources because I use Google Drive. And I know one of the arguments, I even see Matt Money in here. One of the arguments that I had against being bullish on Google, which he was promoting the stock, big ups to Matt Money. He was talking about this even when it was at like 130. So like I do still think that those are small aspects of the business, but there are things that they're doing that could make up for massive aspects of the business that are still growing very fast. And honestly, you don't have to look too much further than like cloud computing to sort of see that answer. Margins are expanding extremely quickly. Revenue's growing very quickly there. But then they've also dipping their toes into like Waymo. And then I've got moonshot projects there, like with quantum computing. So the way that Meta could be sort of the next hardware phase of them going from application layer on Windows to then getting into hardware plays through like Meta glasses and stuff, or VR or AR, or however, whichever direction you think that we're going to go. I think it'll probably be the glasses side. That's sort of cementing their moat because it's much harder to build hardware than it is software. But Google's doing the exact same thing, right? Pixel phones are growing very fast. All the hardware side, my entire house, we were picking like a security system and everything, and they were like, well, if you're gonna do sort of like a smart home thing and you want that integrated, you can kind of pick between a few players. And every single review that I was looking for was like, Google has the best system to connect your entire house, right? So the Nest systems, door locks, everything. It's all through Google. They've got a whole cybersecurity play. It's just everything that I want. And the biggest problem was search. And then once that answer got once those worries sort of got answered for me, I got a lot less worried. And then you start to see things like VO2 versus Sora, the video generation stuff. And like Google is destroying ChatGPT on their video creation software. Like it's not even close. Okay. One looks like an elementary school project and the other one looks like real AI video. Like it's extremely hard to tell that it's fake. It's only going to get better from here. What is clunky and hard to understand? I've been saying this for years. It's not my quote, but what's clunky and super what's clunky and super hard to use in AI next year will be next to perfect. The rate of change is 4x Moore's law. Like it's insane. Betting on any of these companies, I think you're going to do fine. But I just wanted just a little bit. I just wanted a little bit more exposure, and I think especially I didn't want to be late on the boat for Google whenever the quantum computing thing came out. And a lot of people can say that I'm late to the boat because I didn't get this at lower pricing. But like, I think that it's the same thing of like Meta. Like you're buying Meta at 88. Are you going to bash someone if they buy it at 200 or 250? Like we're at $600. So like, am I not the first one on the boat? Sure. Do I think that I'm buying it overvalued? Not at all. I don't see people wanting to wear glasses all the time. Brother, I'm doing it. Matt, are you saying that actually? Because every single thing that you say is a joke. But I could absolutely, like, there's a lot of people that do believe that it might be one of the largest. I mean, it is one of the largest companies, but probably the largest benefactor in this next sort of um, technology wave. So are you calling for a $5 trillion market cap seriously, or are you just having some fun? Yeah, it is only a double, but I mean, like, it would make it the largest company on earth. So I guess it depends on your timeline. I guess I was kind of thinking like a 12-month timeline. What rank is Hood in your position or in your portfolio? I'm not even sure. I'm not sure. I could check pretty quick, but um, one sec. Ninth. Ninth. Yeah. Google the 5 trillion makes sense, especially if they become a fart coin treasury. Yeah. The only problem, and maybe Matt Money has some opinion around this, I'm not sure, but I've got a couple problems with Google still. And one of the largest problems is just like the culture there. Got a real problem with the culture. I think Sundar Pichai might be the worst CEO in the Mag 7. Yeah. Yeah. My three biggest conviction plays for 2025. So I really do think that the ones that I'm going to be building into in 2025 is a lot of big tech. I think that that's what I want to do. So it's probably going to be Nvidia, Amazon, and Google. B-dubs thinks it's SoFi, SoFi, and SoFi. I haven't added to, like, I think SoFi is going to do great, but oh, sorry, I think you mean biggest convict. Sorry, I added. Sorry, I said the ones that I think we're going to add to the most, which would also be the ones that I have the highest conviction on. But which ones I think that are going to have the largest move in 2025? I'm not too sure. I'd have to think about it. Tanner, what happens to SoFi if the Fed raises rates in 2025? That will not be good. That will not be good. No, SoFi is not as great whenever the rates are coming up. It also depends though. Like there could be a lot of like, if the loan platform, I mean, yeah, there's no way to spin it. They could be defensible. They could create a business where the loan platform business maybe still institutions are looking to write their own loans, but that will slow in a interest rate rising environment. I don't think that that's going to happen though. I think there could be some debate between whether we see 50 basis points or 100 basis points. Um, but to go from 50 down to zero and then to go from zero to then potentially going up 25, that's a long distance from where we are. But like I showed you with the image here, let me just bring it up again. The truth is we have no clue. We have no clue. Guys, there's a little too much confirmation bias here tonight. If Trump cracks / breaks the market, everything goes down. There is no safety. Sure. I think that that's why you should focus on great businesses that will see to it that they reach the other side of that correction, right? If that's even going to be the case, which I don't think that there's going to be a breaking stock market. I think during technological advances like this, like AI, we're going to see a lot of economic growth, not slowdown. There might be some bumps and definitely some articles in the midpoint of that where people get really worried, but it's not like one of the things of why the internet took so long to even develop, even in the late 90s, early 2000s, is the fact that people didn't have hardware to support it. But now with things like every single person uh, in these countries having smartphones, all the companies and businesses that are starting up directly on with these cloud providers, they can immediately buy like AI compute directly from the cloud. They don't even need to go out and buy hardware and start setting up. It could be a direct relationship between just like digital compute. And so I think the access to these new technologies and how fast it is to ramp from there is so much faster than it's ever been. This is not like what it was previously. So people can debate on whether valuations can change, but I've never invested that way. I only focus on the valuation whenever I'm buying and whenever I'm selling. And I'm definitely not looking at selling right now. And I'm only looking at buying. So I'll buy more as things go down. But if they go up, I'm making money at that point. So I don't worry. Yeah, the whole like having stocks as AI plays, like I'd have to play like the Jeff Bezos thing for you of like, oh well, I think this was back in like '99, whenever they were first buying warehouses and stuff. They're like, well, you're not a pure internet play anymore. Jeff was like, okay, who cares? We're trying to make the biggest business. We're not trying to be a pure internet play. I think that every business, the same as you can call every business intertwined with internet, every single business is going to be using AI. And this could be in every aspect of every part of their business. So, like, even for SoFi, filling out a personal loan form or, getting just new products or even personalized suggestions of how to make those products better for each user will all be AI intertwined. And then eventually we'll just stop using that word because it's just going to be technology once again. AI hardware in terms of consumer endpoints like iPhones and PCs seems like a bit of a con. I think it is a bit of a con. But I also think it's just mainly that um yeah, no, I don't want to speak on that really, but it is a bit of a con. Watch this go into the 12s and you'll see Noto use that 30 million to buy. Can you imagine that? Like, think about the timing of that loan, just like 2 days before a crash, and he just like predicted it and then doubles down. I don't think you'll see 30 million to buy. I do think a lot of it's tax, right? For tax purposes, but maybe there's a portion that was just liquidity for him. In that case, there could be some buying. But it'll probably be $1 million buys, not large chunks. He's never really done that. AI's been around since 1980s. Well, yeah, I mean, machine learning algorithms have been around forever. I think that the new sort of phase of AI that's getting everyone excited is this natural language processing. Just means that it's accessible for more people, and is definitely doing a lot more now. The Salesforce CEO is super hyped about their agent thing. Yeah, but I'm a big fan of them too. And those are always like I kind of see from some of the Google people's perspectives now, like whenever I'm uh talking crap about this business from sort of an ignorant standpoint, and they're like, this company's touching so much more than potentially first glancers would think. And I think from the sales point or Salesforce perspective, like I remember whenever Chamath was like, oh, every company is going to build their own CRM. I'm like, okay, all right. I just think it's silly. Now the next question is like, I'm thinking about Uber, and I'm like, is every company going to have their own app, or is just the straight distribution that Uber already has going to allow them to win over all of these autonomous fleets? That's the next one I'm thinking about. So when will Canada become the 51st state, and will the Americans welcome our universal healthcare system? I don't want $600,000 in healthcare costs. I don't like. Excuse me if I'm wrong, but like, isn't the equivalent of that in the States is that you just get insurance? You allocate a percentage of what you're earning towards insurance to cover those costs, and then they can debate the cost down to what they want to pay. And then, yeah, like it's not like people are running around hitting $600,000 healthcare bills. I'm sure people without insurance are doing that, but what are my thoughts on SoFi? Should I sell? Okay, Omar, perfect. So you didn't hear me at the beginning, but I will repeat myself to close out the episode. There was a couple other things, like Affirm and Adyen expanded their partnerships. So they did two things. One, Affirm is now going to be offered through Adyen as part of their Adyen for Platforms business. So very good, expanding to more customers. But they're also bringing Affirm to Canada with different payment styles. So instead of just biweekly, they're also going to be adding monthly, flexibilities, but to a lot of their Canadian merchants that also do want that flexibility. So big win for Adyen, big win for Affirm. Adyen's still killing it. This is another one that people don't have their eyes on. ADYEY, ticker symbol, if you're in North America. If you're in the Netherlands, ADYEN. But if you're in America, look at that payments company, one of the most dominant players. You look at the moat that sort of Amazon has, or not moat, but just the gated walls that they put up around their payment system. Not any company can be in their payment field, and there's actually so few, and Adyen dominates it. So if Amazon trusts them to do their payments, if Meta trusts them to do their payments, if there's all these companies that trust Adyen to help with their payments, how is it possible that they are winning those businesses, and how hard would it be for them to win going down market? It's a very, very interesting name. Um, keep an eye on that one. Um, let's see what else I have here. Robinhood is welcoming Christopher Payne onto their board of directors. I think that this is an interesting one. What else? Yeah, maybe I'll just talk a little on SoFi and then wrap it. There's not too many other stories. But so, in terms of keeping calm, and is SoFi going to go down over the next couple weeks or something like this? I'm not Nostradamus. I don't have a crystal ball. I've never done like short-term price predictions, and I'd probably say that anyone that says that they can is I don't know. It's a little silly to be doing that sort of stuff. Ask yourself if Warren Buffett or any of these super large investors are worried about the short-term price actions. Okay, worry about where SoFi is going to be in the long term. And if you are too heavy into SoFi where you're worried about where they're going over the next couple of weeks, you probably shouldn't be in it at all. Okay. You might be too concentrated, or your time horizon's way too short. It's a bad style of investing. And if you want that style of investing, there's other YouTubers for you, but it's not me. Okay. Like, I'm not here to promote gambling. I'm here to promote like making actual money, getting like rich through being patient and investing in the greatest companies of all time. And it sounds boring, but 9, 10 years into this, it's life changing. Okay. Yes, I'm too heavy all in on SoFi. I mean, it's fine if you have like a $10,000 portfolio or something, like, go all in. But if people are playing with like 250, $500,000 portfolios just like in one stock, it's just, I don't know. It could be crazy. Um, and it gets crazier as the market caps of those companies get smaller. But that being said, I thought this is going to change my financial life. The company has been exploding. it could have if you bought it like $7 or something. You would not have waited long to potentially more than double your money. That being said, we don't know what's going to happen in the short term. I don't think that anything that the Fed said is to worry about SoFi, right? Rates are still coming down. They're just coming down slower. This doesn't change their business. It might change people's forward forecasts of the business, but I don't even think that 2026 EPS or anything like that is going to change. Like, at all. The less stocks you have, the longer your timeline needs to be. That's a good saying. I like that. The number one reason for personal bankruptcy in the US is healthcare costs. Okay, but can I not get insurance? James, brother, I feel calm. I feel calm. Like, everything, whenever, like, especially the newer you get, even small corrections like this can seem like big moves in the markets. Okay? It's not. It's not. We have nothing to worry about. Like, I don't know. I'm in Canada. I'm asking about the United States because I don't know about the insurance there. I am in Canada, but like nearly every single dollar, like I make US dollars. I both like this, my course, everything, all I receive is US dollars. I invest in US dollars. I invest in US companies. I own one Canadian company, and it's the best company here, and that's Shopify. That's it. And the truth is that markets are always just forward looking. Like what could also happen here is another week could go by. And I mean, this could be very quickly, like even after hours stocks are up right now, but this could be over a 3-day period, 2-day period where we digest another piece of information that was a little bit more bullish uh, than potentially, Jerome Powell was being. And then everyone's back on the train of AI going up and the robots are still coming, AI is still coming, all those things are still happening. Um, People are very excited for the uh, economic benefits of Trump being in office. That's still happening. So, you know, yeah. And it's not like we didn't get our 25 basis points. No, I don't own sound shares. What brokerage do you use and how do you handle or tackle the exchange fees? And um, you put conversation fees, but I think you mean conversion fees. So transfer directly like US dollars into a US account. Um, I've got a pretty good relationship with my brokerage right now. So the fees are super low on the bringing it between US to Canadian if I need to take any money out. Um, but I won't tell you exact like I'm sure people could guess what my largest brokerage is, but on advice from Stephen Fiorillo, I shouldn't say this. I shouldn't tell. Tanner, let's not forget you've only invested in good times. You're acting like COVID didn't happen or the years that followed COVID didn't happen. I didn't panic. You can look at broad markets and think that my portfolio was doing good all the time, but like being in all tech and growth, there was a lot of shit that was being taken during that time. Um, so you're right. I need to go through experiences of longer bear markets or like yeah, sure. I've never been through a depression or something like this, but um, usually bull markets last much longer than bear markets. Uh, yeah. What time did you start investing, Tanner? October of 2015. I bought my first stock, which was 5 shares of Tesla. And I still hold Tesla today, but not those shares. I sold out pretty quickly once I made like 40 bucks and then started buying weed stocks. And then because it was getting legalized pretty soon for um, Canada and thought that I could make some money there. And I did. And then I got back into Tesla. Am I buying more or waiting? Well, I bought a little bit today, um, just to make sure that I could secure that if this was just a tiny bounce, that I did check off the box that I bought a little. But I've got more to go if it continues to fall. Do I trade any finance companies in Mexico or South America? I mean, Nubank and Mercado Libre. Those are the only two, and they may go through some short-term pressures, but those companies are unbelievable. They'll be bigger and larger in the future. Yeah, that was my first weed stock, Canopy Growth Corporation. Yeah. Yeah, bought Canopy. Dude, I was around for Canopy so like back whenever it was called Tweed. Tweed, then CGC, then what's their ticker symbol now? Like weed or something? I forget. I don't know if they're CGC or weed. I don't follow the entire industry at all anymore. Did I see that D Local maybe having takeover talks? That's interesting. I didn't see that though. I don't follow it, but um, followed you from Amit's live. Do you do market open, market closes? I do not, but I do a live stream every day at 8:30. And then I do regular videos in between that, and I do course member live streams starting in the new year. First episode, January 7th, by the way. Could Four be interested in buying D Local? Maybe. I spoke with Jared Isaacman. They definitely had nice things to say about D Local. Yes, 8:30 p.m. Eastern Standard Time every Monday to Friday. Sometimes Friday, I should say. Tanner only buys what he knows. I mean, back in 2015, I did not only buy what I knew. I had to learn about that because I started buying shit. Like I've gone through all those experiences that people go through of like, you know, getting into good companies, making a little bit of money, and then looking for those next companies that you have to chase because the company that you just ran up is going through a mature, like cycle in their life, and so the earnings and the growth rates start to slow and everything like this. And I didn't like I didn't understand the compounding annual growth rates of just I shouldn't say I always say CAGR instead of just saying compounding rates. But I didn't understand holding long term is probably the more beneficial thing to do. It wasn't in the weed stock stuff, but it would have been to just hold Tesla through 2015. It sounds so funny, but like everyone's like, oh, you bought these companies at good times, like it was so much easier to invest back then. It's like, dude, whenever I bought those, people were telling me that the valuations for those companies were way too extended. Like Nvidia was super expensive back then. Tesla was super expensive back in 2018. You know, they're expensive now, and the same thing with Shopify. Shopify's never been cheap. It's never been cheap. But also, expectations in the total addressable markets and the products that they get into were never expected. Have I ever? I've played in penny stocks. I don't like to now. I was never good at it. Now this is a Canadian right here. And also, I think way behind whenever we're still talking about conversion rates in Canada. But bonds are super cheap right now. I mean, generally, or it's just a completely new area for me. That's maybe what the next 10 years or maybe the next 10 years after that is for me, is learning a lot of other investment vehicles. But I've been pretty concentrated and focused on what I know, which is growth investing, and have been not swaying from that a lot. You know, Trump picked Jared Isaacman to head NASA. Yes. Yeah, he did. And he's stepping away from Shift 4 to do so. Brother, yes. Yep. Not my first time holding Amazon. Not my first time. This stock way back before it split, like I was holding it and then it ran up a little bit and then I was like, yeah, I made some money and then I sold out of the company. Um and then haven't held it since and now I'm buying it, multiples higher than where I bought it from. But it also doesn't mean some people say this to me and it's just a lesson that I like everyone needs to sort of go through where just because you're buying a company later on in its life than whenever someone else bought it or something like this does not mean that you can't make money also. You know, there could still be many more gains to go. And they can make 1,000x and you can make 100x, but you'd still like to make 100x. Okay? But and I'm talking big, like I'm ramping up the numbers here. It might be, they made 100%, you get to make 10% or something like this. But the idea being that other people's gains, people talking about where they bought Tesla, where they bought Bitcoin or something like this shouldn't stop you if you think that, there's still future earnings to go. Like think about whenever I bought Robinhood. Like speaking of the Robinhood Weekly, like Amit was telling me to get into Robinhood at like 7. And I was like, or 8 or something like this. And I was like, nope, don't want to do that. Didn't want to do that. It's fighting the idea. Didn't like the way that monthly active users was going down. Didn't understand that, retirement accounts was blowing up and that those people weren't going to be checking their accounts every day. And there's just a big shift in the way to look at that company. And I didn't understand it. And then it had ran immensely for them. And it was at like $20 a share. And then it finally clicked for me. And I was like, oh my God, this company is going to be huge. And then whenever it went down to like $17, I bought. Well, Amit can buy, for every 2 and a bit shares, I have 1 share to his amount at these new prices. He got a better deal than me. He saw it earlier. Good. But I still have a stock that in a very short period of time has gone from 17 to at one point $44. I think it took a big step back today because it's down like 11%. But who doesn't want a 17 to 44? If you had an ego, you'd be trying to find the next new company. But sometimes you don't need to find the next new one. Sometimes you don't need to go find the next new Tesla or the next new Nvidia. Everyone's talking about AMD. I'd just rather buy more Nvidia. I know them. I know management. And you guys should look at the relationship between AMD CEO and Nvidia CEO, by the way. Google that one. But what's it called? Yeah, I don't know. That's a hard lesson to learn, but not always a bad one. And once you get it, I think that people will make a lot more gains and they'll sort of break out of that average retail investor return of like 2.7% a year, which is insane. What 3 stocks are you long for the next 5 to 10 years? I am long my entire portfolio for the next 5 to 10 years. Everything I own. Well, that's not true. Unity, I cannot wait to get out of. But like I said, there's a lot of new people in here since I was talking about Unity earlier. I didn't want to buy it. It wasn't my decision. I was told to buy it and was given the money to buy it. It was only like $100, but it's still on my freaking portfolio and I want it off. What's my average? Whatever I bought it at January 1st of 2024. And then once the new year comes, I get to sell it. That was Tevis. I don't know if everyone knows Tevis, but. And then we're doing a New Year thing. And I said I wanted a different person. So I think I'm going to take Roy this time. He did great last year. So we're all going to shift and we're all going to pick each other a stock and then compare who gets. Tevis Tevis picked the worst stock, but the person that has to face the person with the actual money going down is me. Just joined. What are we buying? Well, we're not buying anything. Tanner bought Google and Amazon. I did. But you don't have to follow me into that trade. Nor should you. Because we don't have the same time horizons or the same goals or anything along those lines. So no advice, just the guy talking. Why did Hood drop 11% today versus SoFi and other fintechs? Well, they a lot of the reason, like, this is sort of, we talked about this on the Robinhood Weekly. Robinhood is just sort of a leveraged bet on the overall market. So if there's less retail activity in stocks, which usually happens whenever things go down, right? If Robinhood had tools like shorting and stuff, then we might see some activity on the way down as well. But usually what you're going to see is just a lack of activity, especially in equities, as they go down. Which makes, not only does a day like today mean, hey, Robinhood is going to go down because people are trading it off like they're trading off every other fintech, but then there's also this aspect of, hey, is the market going to slow as well? And then crypto also got hurt, right? So the amount of volume that might flow through crypto at these lower prices might be less than what it was trading at whenever it was at 106,000. So you can kind of relate like Coinbase and Robinhood. There are other fintechs that sort of traded in that range as well, and they're either crypto related or brokerage related. What do you mean Robinhood accounts can't short the market? I mean, they have they have access to options to allow them to benefit as stocks go down. But they don't have access to actually shorting tools. Like just straight shorting. How do I keep my portfolio small whenever I hear and see so many good deals? If you do see so many good deals, why would you want to keep your portfolio small? But I think what you mean is, well, one, you could be joking, but another one is, how do you be patient during times whenever the market gets hot? And I think that's just in stomach, you know? What do I think about HIMS? I don't think about HIMS. I like it might be an amazing company. I just not into that sector. I don't buy pharmaceutical businesses, and that's not. It's just mainly because I don't know anything about it, and I have a much better understanding of just like my behaviors on the internet and tools that I use, and then I can just sort of go, hey, I think other people are going to use these tools, which is pretty easy for me for fintech and AI stuff. I'm just like, well, yeah, that makes a lot of sense, and I'll buy more of that. But with pharmaceuticals, it's like, I don't know what drugs are going to come in, what drugs are going to come out, where to follow all those. What if there's this new miracle drug that just completely wipes out the need for these drugs? It's just an entire new industry that would just freak me out owning. And I wouldn't be able to have that, patience or like good understanding that nothing Nothing bad is going to happen if new information comes out. What's the TAM for sauna companies? I don't know, ladies and gentlemen, but I recently got a sauna, put it in my basement, and I do a sauna like every single day, and I think that you guys should too. So, yeah, I don't know what the TAM for sauna companies are, but I certainly think it's large. So, Gig, what do you think we're doing? We've been talking about Google and Amazon all day. This is more than fintech. The whole episode's been more than fintech. Amit is a grifting clown. I think he's the absolute opposite of that. I think he might be one of the genuine nicest and best people on YouTube. He doesn't push a single thing. Like, I think that his love and excitement for Palantir is nothing than his true love and excitement for that company. The dude he doesn't partner with any companies, doesn't, push any of his own products or anything like that. Like, yeah. Amit's legit. I wanted to hate him. Yeah, you can't. He's way too nice. I was coming into New York and me and Roy, and he was like, hey guys, you guys can come over and like I'll pick you up from the airport and I'll let you stay here. And like there's just all these events where like Amit, being as busy as he is, he's like, oh, can I just lend you 2 hours of my time to tell you what I know about this to potentially further your understanding of this new area that you're getting into? He's way nicer than me. I'd be like, oh, cool. You're coming in? Okay, well, Uber to my house and I'll let you stay here. Even if that, I mean, but he goes out of his way to be nice. He profits off pumping hype. He has been consistently talking since like $30 about how he thinks Palantir is going to continue to fall. He can't control the fact that it continues to go higher. He's not a pumper if he picks, stocks that run. Okay. It's $170 billion company or something like this. What percentage of his audience do you think makes up for that? You're completely entitled to your opinion, but I do disagree. I do disagree. Amidst talking Pokemon tonight with Steven. Really? Right after an FOMC meeting? Come on. Will SoFi go below 13 tomorrow? YG, I don't know. What did it actually close at? I think it closed above 15. Am I wrong about that? I think it did a recovery rate at the end of the day, no? 15.24? Yeah. Do I think it'll be 13 tomorrow? No. But I could be wrong, but like it's up in the after hours, 15.53. That'd be a pretty wild day tomorrow if that happens. Zach, I'm sorry, man. My covered calls paid me. Yeah, that's nice. How much longer will I be live? I'm not being live any longer. Ladies and gentlemen, thank you all so much for watching. Usually these live streams are only about 30 minutes, but honestly, whenever we're having a good time like this, and I can potentially answer some of your questions, they go a little bit longer. Really do appreciate it. If there's any way that you guys could support me, it'd be to subscribe. Anything past that, maybe follow the Discord if you use Discord. Down in the description down below. Thank you all so much for watching. Really do appreciate your time, but bye for now.